You're listening to SQRradio.com. The Squirrel.
From the ranks of the disenfranchised, it's the government's worst nightmare. It's the Krieger Files.
All right, we are back. Fred Dashevsky with USCoinCapital.com joins us this morning. Fred is a regular guest on the show, and we do this for a reason. One, because we want to update you with a gentleman who has studied this stuff religiously, and I'm talking about the economy. I'm talking about the psychology of things, like the economy, and what people can do to survive, which is one of the reasons why I started the show. Fred, welcome back, sir.
Hey, great to be with you again.
How are things down where you are?
Things are good here. This is a great time of year to be in South Carolina. We have a really hard summer due to the real heavy heat and humidity, and that begins to fade this time of year. So we're in our sweet spot. So it's just gorgeous to be here this time of year.
No doubt. Well, and of course, there are other parts of the country that aren't doing so well. But the thing is, economically, I think that, do you notice everybody's struggling, or do you have people calling that say, nah, I'm all right, I'm just wanting to move my money around?
Well, yeah. So you got a range of people, from those that are, hanging on by the skin of their teeth. And then there are a lot of people that do have an awful lot of money that also are sitting on it. The massive buildup of cash reserves has actually grown so much that we've approached several $1 trillion worth of capital that's just languishing as the people that do have capital are trying to figure out exactly how to manage this economy. A lot of people are really concerned about how the Fed is intervening, and we're looking at markets that have been heavily manipulated since COVID in 2020. And, thinking about where we started there, the Fed dropped rates down to zero to try to stimulate economic activity. And then people were too concerned that they might overheat the economy. And here we are now at a point where the rates have jumped up. They've gone up 500%. And now we're looking at rates starting to drop again. And, of course, everybody is beginning to game out whether or not the Fed will drop rates in September and how much they will do that. I'm thinking we're finally at the point we should probably see a quarter-point drop because the Fed's behind the curve as other central banks are beginning to already make these moves. But we are facing a real problem. There's massive financing that everybody seems to have forgotten about, all this stuff that we did after 2020 to move the economy forward, especially the U.S. government raising capital by selling off a lot of short-term bonds that are now coming due because this is 2024. 2-year bonds and 4-year bonds are floating over. So now we have to have the capital repay. There's going to be a real liquidity crunch before the end of the year that I think is going to require the printing of a ton of capital, and people should start to get prepared for this wave of money we're going to see by year end.
Wow, because I've been reading stuff like Elliott Wave and the Dent Method and all this other, a lot of these other pundits out there that literally they're saying Bitcoin is going to tank toward the end of the year. And I'm just like, look, why would anybody invest in Bitcoin? I mean, that's like, Bitcoin and Ethereum are figments of the imagination. I mean, it's there because people says it is, just like the U.S. dollar bill. The dollar bill is a Federal Reserve note. Fred, you know that. I mean, you've studied the history of the Federal Reserve. It's not federal and it's not a reserve. It's a private banking cartel. And frankly, for those of the uneducated out there, our dollar is backed by nothing, thanks to Nixon. Can you elaborate?
Absolutely. So we did go through this interesting change, and I think a lot of Americans forget that it was actually illegal as an American to own physical gold between 1933 and 1971. So we had messed up our financial system so badly that by the turn of the 20th century, the gold backing and silver backing that had been sustained on our currency since the 1790s was beginning to fall apart. So the first phase was a recall of gold from the general public in 33 to replenish the treasury vaults, but then also the removal of the legality of an American to own gold. So they try to prevent the redemption of paper notes for physical gold to allow the government to stockpile it. And then as we move forward into the 70s, Nixon again completely changed the standard of the U.S. dollar. and took the basis away from it that prevented the government from inflating its value by forcing them to have a supply of gold before they printed a dollar. Which is really simple, very straightforward. It made the process legitimate, and it gave credibility to the currency. And again, it prevented the governments from overspending. But, of course, the needs and desires of the government outweighed their ability to control the economy, so they removed the standard, and it allowed them to finance wars and all sorts of projects that they decided to move forward on from that point. And without this gold standard, little by little, we began to inflate the value of money. In 71, when the public was told, okay, you can buy gold again, but our paper money will no longer be backed by gold, a lot of very smart Americans piled their capital into gold and silver. When gold was $35 an ounce, silver was barely $1.75, $1.80. By the time we hit 1977, gold had hit 100, then it eventually by 79 and 80 would hit 860, and we saw silver run up to as high as $50. And this was just the response of the general public saying, well, crap, if the government's not backing my money with gold anymore, I better buy it physically now that I'm legally allowed to. So at least we are fortunate in this day and era that we are able to legally own gold. And I do recommend that people do that, because I do believe there is a flaw in the ability of government to print their way out of their problems. And I'm telling you, this wave of money we're going to see by year end is going to be devastating.
Well, the thing that bothers me is what they're going to do with the money and who's supposed to pay it back. We, the people, are supposedly bonded. And, the bonds are being held by somewhere in England, the Bank of England or somewhere. They're holding them all. Apparently, every time a birth certificate issued, there's a bond put up. And these are the things that a lot of people have been talking about, and they're all curious to find out where it is and how they can cash it in. It's like, no, it doesn't work like that. This is a deal that the U.S. government made, and Britain told us they were going to take us over by contracts anyway. So, I got to wonder, all these other countries out there that are looking at the U.S. dollar and the fact that they're printing more of it, it's making it weaker. And all of a sudden, now these other nations are popping up with their own currencies, and they're backed by none other than...
Yeah, actual gold. Well,
yeah, something like that.
Well, so far, we are experiencing a real big problem, which is that, you've tapped upon something that's huge, which was this, ability of the U.S. dollar to float since 71 without a gold backing and still maintain its strength. And, the rationale for that was that we had basically forced foreign countries to stockpile U.S. dollars to use to buy commodities. And we made these agreements and, force-fed them upon various countries. And as we move forward over the decades, of course, a lot of countries said, well, we would rather not use the U.S. dollar, but there aren't a lot of alternatives. But again, in the last couple of years, I think I mentioned this the last time we talked, in 2022, the U.S. dollar accounted for just shy of 80% of all transactions worldwide. As of 2024, we're down to 49%.
Ow.
So there is actual competition growing for alternatives to the dollar. Now, I worry about the idea of the dollars fading more and more, because if we don't retain this reserve status, in other words, if countries aren't interested in having U.S. dollars stockpiled, that means that they're going to come back to the U.S., and we're going to be fighting a big battle, which is the amount of money we're printing versus the growth of our economy has given our GDP ratio, it's jumped to 130%. So, in other words, we're spending more money than the economy can grow to pay back. That means the debt's going to continue to escalate and accelerate in the rate it's growing. And we did crack the $35 trillion mark. What are we supposed to do? Throw a party? Congratulate ourselves? Okay. We are now the greatest debtor nation on earth, $35 trillion in the hole, and we're adding almost $1 trillion every 100 days. So I think this is a real problem that we need to address for sure. And, the more I keep going back, because you and I have talked about stuff that I think is really relevant, like you always mention things like, modern money mechanics and, the books of like Eustace Mullins and Griffin when we talk about the creature from Jekyll Island. Getting this fundamental understanding of the way money works, I think, is crucial for Americans in the same way that you're promoting the idea that people need to understand the way the mortgage systems work. I mean, how do you play the game if you don't know the rules? And I think if the public understood the rules, they would make different choices. But we're growing up with a bunch of very, and I hate to use the word, but ignorant people. They don't know anything about the structure of money. They don't know anything about how the banking system works. They don't know the truth behind the mortgage markets. They don't remember that, all those ninja loans you mentioned in the last part of your episode. The reason that was so popular was because the investment bankers behind the banks were saying, we want more of this stuff because we're able to securitize it and sell it, and we're selling it like crazy, like hotcakes. We can't get enough. So write more mortgages. And the banks would come back and say, but these people aren't qualified. And the investment banks said, we don't care. We'll take the mortgages and sell them to Freddie and Fannie, and nobody cares. Everybody gets paid. So let's just roll with the punches and then deal with the aftermath on the backs of the public, which always bear the brunt of these kinds of frivolity.
I forget who the congressman was that said it about spending and borrowing and spending and borrowing. They must be really partying at the strip clubs in D.C., Fred, because this money is just flying out the door like crazy. These people are reckless, according to that little ditty we just heard. The thing is now you have basically projected, based on your research, and you have been doing a lot of it, that if people don't start getting with the program and stocking up on silver, at least I'm doing junk silver. That's my thing.
Yep.
Gold coins, you deal in numismatics. You've been doing it a lot. And, explain where we're at and why people need to wake up about it.
Well, here's the thing. So we face a fundamental problem that if the public had a choice, I think they would make it, but we're limited to what we have. And what we have is, as you point out, a fiat currency, an unbacked dollar. We can't stop the government from spending more money than it brings in. And I'm sorry for those that have, a point of view that the election's going to matter. I am an extreme optimist, and I hope I come across that way in all this, but I do not believe that anything is going to change with an election, because these things are bigger than any president. And we can go back historically and look at whether it's been a Democrat-controlled or Republican-controlled Congress or president. It makes no difference. So with the advent that we will be definitely printing a lot more money, because we have all of this existing debt and all these short-term loans that we've taken out that have to be repaid over the next several years. So the need for money is massive. And there's no other way to get it except either to tax it or to stop government from overspending, neither of which can compensate for this big gap. The only solution is to print the money. And if we're going to print this amount of money, that means what people have worked for their lives over and over again and tried to save and earn is going to change in value from forces they cannot control. So my opinion is we need to compensate for that. If our government is not going to be smart enough to provide us with a sound currency system, it is up to the individual person to take that economic responsibility. And don't watch the train come down the tracks and run you over. Step off. Take a step to the side. Add something tangible to your investments that will allow you to see something growing in value as they print more and more money, because there is an inverse relationship between how much money we print and the price of gold and silver. It's the reason that gold is no longer $35 an ounce, but it's now $2,500 an ounce. And it's going to continue to get a lot higher as we print more money. So I think the idea of owning gold and silver coins, is just to try to even the field, try to give people a leg up.
So we basically are over leveraged in America. We have a phone call. Brady, you're back on the show with us here on the Krieger Files. Did you not say something to the effect that you thought silver was going to skyrocket?
Yeah, in the next 90 days, good morning, guys, you're going to see silver go from 30 to 50. Probably by Christmas, we'll see $50 silver. So the time to buy is today. The time window to buy silver at $30 is today. And the announcement yesterday by Samsung, they're going to revolutionize the electric vehicle car battery, because they are now using 1 kilo of silver in their new batteries. These new EV batteries are phenomenal. It's going to revolutionize and actually bring back the EV market, because you can charge these batteries in 9 minutes and it gives you a 1,000-mile radius to go in your car. Absolutely going to destroy the gas industry coming up. It's a big thing that happened, and 1 kilo of silver is in each battery.
Well,
That's
so how does this all figure out, Brady, as far as the economics of all of this, and how do you think there is a correlation between the price of silver and where it's at now, and when they start, putting all this and importing silver to put into these batteries? I mean, they're going to be basically mining silver. They're not going to disrupt our silver coins. They're just going to start mining silver and putting silver. It's not going to be 0.999 fine silver, is it?
Oh, I'm pretty sure it's going to be 0.999, but the problem is there is no above ground silver anymore. It's drying up as fast as we can see it. And none of the companies are taking it out of the ground anymore. So you're getting into the situation of supply and demand. Huge supply, huge demand. I mean, low supply and huge demand. That's where we're at. There's an 80% shortage now with these new batteries coming on the market of silver. All that means is there's going to be an 80% upside to the price. So you're going to see $30 pretty soon, a couple months, $50. And probably in 1 year, you might see it around $250 to $500. That's going to bring back the ratios like it should be. Gold at $2,500 and 5 to 1. Silver should be at $500. That's the true price of silver, folks. $500, not $30, $500.
Oh, wow. Okay. Thanks for your call, Brady. Fred, what's your take on that? Do you agree with that? Is that logic? Is that good logic?
Well, I haven't heard anybody call for $500 silver. That's the first. But I understand the point he's making, which is extremely valid, and here it is. So if there is this increase in demand for silver because of a production change, and they've come up with a way to create a battery, if he's correct, and they can charge it, 9 minutes, that's phenomenal, because that's one of the downsides to EV problems for people, and, of course, the distance that you get before you have to recharge. So we are at a point where the mining of silver currently and its current usage is barely even. I mean, it's slightly on the short side. So any slight increase in need or demand is going to offset a real problem, a real supply-demand problem. And that shortage will kick in quickly, and it could absolutely raise the price very, very rapidly. We've seen how quickly silver responds to different environments. I mean, it's touched $50 very quickly a few times historically because of short-term demand issues. So I don't dispute the idea that there's a lot of upside to silver, and it'll be interesting to see. I generally am a long-term player in this. I look more for the devaluation of the currency to drive the price up, but then I also understand, of course, dealing in a physical commodity like this, there are external events that could always at any time, come into play and turn out to be the biggest, factors for its price. So I'm interested to see how this rolls forward. But I do understand that there is definitely an issue there, a supply and demand problem, and that's just the base metal. Now you think about the silver coins, like you accumulate the pre-65 dimes, quarters, and halves. Well, they already stopped making those, and that was in 1964. So they haven't even been minted since then, and of course they can never go back and make another one. So as people decide that they want to own more of these physical items, and that supply is already absolutely locked and fixed in time, the only thing that could happen is a response, and that is a price that goes up. I mean, supply and demand is about as basic as economics gets. So I'm very optimistic about the future prices for gold and silver, and would definitely encourage anybody interested to do this. I think the timing is terrific for various reasons, including what the caller has pointed out.
Right. And so this is the thing, he's always on the lookout. And we have a lot of people out there that are very astute. But the thing is that you're talking about the manipulation of the market. And this is exactly, these are the kinds of events that you're speaking of, where our United States government turns around and they say, hey, we're going to print up another $1 trillion and put it onto the market. And all of a sudden, the value of the dollar goes down. I mean, that's a logical conclusion, is it not?
It is. In fact, the dollar's beginning to fade. We're down to 101 on the dollar index. The last time you and I talked, we were closer to 104.5, almost 105. And, the weaker the dollar gets, it starts to become problematic because it discourages other outside investors from accumulating U.S.-based debt instruments because they don't pay anything. So right now, the 10-year money in America is down to 3.8%. It was almost 5% at the beginning of the year. So now you hold that same 10-year note, and instead of getting almost 5%, you're going to get 3.8%, and you have to hold it for 10 years to get that. So your expectation is inflation will not chew away more than 3.8% of its value each year. I'm not buying that premise whatsoever.
Yeah, see, and if people would read Modern Money Mechanics, folks, I got to tell you about Modern Money Mechanics because Fred brought that up. We have talked about it in the past. If you go on the search engine, and I don't care which search engine you use, frankly, to get there, but the Federal Reserve Bank of Chicago has put out a 40-page printout called Modern Money Mechanics. And if you have not downloaded this and read it, you need to, because it explains in not so finite terms how our money system works. And it explains the credit and debit system. It explains a lot of things that most people don't understand. We've talked about this before.
It surprises me that that's actually still available. I got a hard copy of it off of Amazon not too long ago. I mean, it cost me like $15 or something to get a printed copy of it. Just ordered it on Amazon. I mean, it's amazing that that's still out there. I'm surprised they haven't suppressed that information.
Yeah, I know. Well, I've got it in PDF form, and those of you who want a copy of it in PDF, if you can't find it, email me at info@thekriegerfiles.com, and I will hook you up. That's simple.
Educate people.
Yeah, we do. Fred Dashevsky, thank you so much. We are out of time for today. Of course, we'll be back tomorrow. In the meantime, God bless you, and God bless the United States of America.